There's good news and bad news. Today we're going to be breaking down both. I think some of this will surprise you about clarity, so stick around for the full episode. Before we get into it, I do want to thank our sponsor, and this is a special offer for you guys. OKX is running an exclusive affiliate offer where you can earn up to $500 in XRP rewards just by hitting a few simple milestones. Step 1, Tier 1, you can complete the KYC. You get $10 in XRP. If you go to step 2, which is $100 on a deposit, you get another $40. Then you can bump that deposit and trade volume of just $1,000 and you grab an additional $100 in XRP. Best of all, for the heavy hitters out there, if you deposit and trade 10 grand, you can unlock a massive $350 XRP reward. This stacks onto all of this. So boom, you get up to $500 max earning, and it's paid directly out in XRP. So click the link down below. You guys are not want to miss this one. It is an awesome one. Let's start off with this right here, and that, of course, is the Crypto Fear and Greed Index. We have not seen a 16 in a while, and, of course, we are zooming in on that right now, not necessarily going into the all-time low, which clipped in right there at 8, 9. And that was back in February. So just think about that, where we are. We got a long way to go there. And Bitcoin trading at around 58 right now. So a lot of pressure on the market in general. With that being the case, you got to look at Ethereum. This is something that hasn't happened ever. And that is that ETH is now closing 3 consecutive quarters in the red for the first time ever. So what went wrong? All right, so coming off of ETH's performance, you got to look at some of the things that Tom Lee is pointing to, and that is macro headwinds, which are weighing in on Bitcoin and ETH. And the big ones right there, of course, is what's going on with the Fed hike. That could potentially be real. The Clarity Act purgatory, which I'll talk about at length here in a second. AI, and of course, FOMO in general, and of course, the issue of private credit hurting flows, which is the outflows we're seeing right now with both ETH and Bitcoin when it comes to ETFs. With all that being said, you still have Tom Lee out there purchasing more ETH, and he's doing it in a way of 27,000 ETH, another 43 million, so putting more pressure on the market. And remember, he is still not alone. Here, of course, is Joseph Lubin over at SharpLink. They came in and acquired another 10,000 in ETH. Total holdings right now setting at 886,000 worth of ETH, so 1.4 billion. Continuing to hold into this position. There's a lot that could be looked at here that could be good in the sense that the market still has major backing by some of the biggest players out there. And then you also look at where and what needs to happen for this to possibly start to correct. Let me go to a clip real quick. It'll explain.
I think there's 3 things we need to get through in the short term. We need some more clarity around interest rates. We started the year thinking we'd have a 75 basis point series of cuts. Instead, the markets are pricing in a 25 basis point raise in September.
It's incredible.
It's incredible. So I think you need the Iran conflict to be cleared out. You need interest rate stability so people understand we might get 1 raise, but not 2 or 3. And then finally, you can't overstate the Michael Saylor overhang on the price of Bitcoin. And when the price of Bitcoin is uncertain, the price of almost all other cryptocurrencies are uncertain. But to your point, the crypto cycle is here.
And I think this is valid because you are looking at, even though Stretch has somewhat recovered, not necessarily to par, and to what we're seeing right now with MicroStrategy, just the approach of what eventually will happen, and that is going to be where Strategy is going to sell some Bitcoin. That's when I want to really see how the market responds, because right now trading well under 60K, that is going to be the true test of Bitcoin. It's also going to be the true test of MicroStrategy moving forward. You had Brad Garlinghouse also mention Michael Saylor and his opinion of what this has done to crypto. Take a look.
I think because they were using leverage, Michael Saylor would characterize it differently than leverage per se, but at the end of the day, it was leverage, and then you start to see that in a place that can actually compound negatively. It added some excitement on the way up, and now that's compounding on the way down as well. I mean, seeing their the particular thing they have pegged at 100 now trade, I think 25% below par. Yeah. Is a pretty damning indictment, and I don't think that's helped the market. Financial engineering does not drive long-term value. Long-term value of any digital asset is going to be driven by utility. Those things compound in a positive way, and I think if you're just trying to financial engineer and leverage and borrow more money to buy more Bitcoin, it's kind of like, look, I think Team Michael Saylor wasn't focused on the right stuff, and that has hurt the overall market.
So what do you think the utility of Bitcoin is now?
Speaking of that, of course, with Brad Garlinghouse, he kind of hit it on the head there in the sense of where the real focus is, and that is utility. Utility is going to be very detrimental in the sense that if clarity doesn't get passed. And I think that's the pressure that we're seeing right now as we see TD going, also pushing down on their likelihood of clarity going through. This is the lowest it's been in a while. Even Galaxy Research came in and they've cut their odds down to 50-50. And remember, this has already started to drop over the last couple of weeks. And there's some reasons here that I think this is happening. I'll explain in a second. I want to go to this tweet real quick because this is an interesting point by Eleanor. And it is in reference to JP Morgan saying, they put out a blog post saying Clarity Act could have some benefits, but they praised digital assets for their potential to enable tokenization and modernize the financial infrastructure. They stopped short of endorsing specific legislation. So I think they believe they can get this done pretty much without. So it basically suggests, JPM says it can already innovate responsibly under today's regulatory framework as it is. And that, of course, puts more pressure on the current situation and more pressure on many crypto companies that were looking to clarity to create that utility. So this simply means they just don't want clarity to make it through. I think this is where they see eventually the death of TradFi, and I'll explain why, because there's a big reveal today I'll be talking about that puts a lot of pressure on TradFi, and it's going to come from places you guys may have not expected. One other thing that you got to look at is the regulatory framework. And the reason I say that is it's the politics that are being played right now. You've got a hearing coming over by the House, which has already passed clarity out of the House, and for the Senate to basically come back with a bill. Now we're dealing with this kind of BS, which to me is just, grandstanding or trying to do something that maybe would get some attention. The problem is this is definitely going to be a push. So when you look at the calendar and who are, lawmakers and what our lawmakers are doing, well, you see it right there. They're already on vacation. It's July 4th week as we record this. This, of course, is going to be going through the 10th of July, returning on the 13th, and we only have basically 3 weeks. And there's a lot more happening. And yes, you have that last week in August, but I anticipate that will be closure week in the sense that they won't do anything for that, because then you have the August session that ends, and most of them are probably going to leave that week and finish out the rest, because they won't come back into session until late or mid-September. And by then, everybody's moving into midterms at that point. And granted, here's what I expect. We'll get continuation of both the Dems and the Republicans saying, oh, no, we're going to keep on pushing it. We're going to keep on getting it. It's going to come. It's coming. Don't worry, it's coming. Here's Mike Johnson saying, we're hard at work. Take a look.
Tomorrow, we're bringing them all back. We got a big week ahead of us of work before you begin all the celebrations on the weekend. Much more left to do. We've got the National Defense Authorization Act. We have appropriations where we're spending less money. And we have the Foreign Intelligence Surveillance Act we've got to reauthorize. We've got the Surface Transportation Bill. And, of course, Reconciliation 3.0. I got to have everybody working here on all cylinders.
I am very bullish about the midterms. Let me just tell you right now, we are ready for this fight. We have a great record to run on. You just heard our extraordinary Treasury Secretary. People are so motivated, and we have the President of the United States running like it's 2024, okay? He's out doing campaigns and rallies, and he's going to look right into the eyes of the camera and say,
here's what I would like to say. Just about everything is a big yawn.
A big yawn, he says.
Y'all, impeachment's not even the big concern. They will turn every committee of Congress into an investigative body, and they'll go after the president's family, the cabinet, his donors and friends. Half of you in this room will be targeted. I run the protection program. I'll take care of you, okay? We're going to win. We're going to win the midterm, okay?
They're just teasing us along, saying, yeah, we're going to get this done. We got all these other things that are happening, which goes to other special interest groups. And of course, right now, when you look at whether or not they can win the midterms, you could go to the poly market right here. The Senate right now, ironically, has been showing out with the Republicans in a position of power holding the Senate. Now, whether they hold the House, that's the real question. I think most likely that gets lost. But the key here is still the issue of them raising money, meaning they need to be able to drag along their donors And one of the biggest classes of donors is coming from the crypto category. And the way they're going to do it is to continue to push down the Clarity track. We're at the lowest percentage that we have seen now, 39%. I mean, when's the last time we saw this? Did we even see one down there? Yeah, 39% right there on January 22nd was the last lowest period of time that we were dealing with. And of course, this continues to drop and more pressure right now in general. Here's a good example of this. For months, it's felt like, yep, next month, actually next month. No, definitely the month after that. That's exactly how important bills die, quietly and slowly. That is where I think we are right now. Unfortunately, this may be a problem. One other thing, when you look at Clarity, here's Meta Lawman James is kind of talking about this. What would be worse than voting down the Clarity Act? And that is where Thune and them would refuse to bring it to the floor. Problem is, and yes, it could happen, but the problem is if they go to the Senate floor without the votes, this thing fails. And the reason that that would happen might be on purpose. If we get them pushing and tanking the Clarity bill, what would they do that for? Well, to raise money going into the midterms. Look what happened. If we want to save crypto, we need more money. That's exactly what could come on in terms of being able to get more lobbied money going into this market and from this market to try to save the Clarity Act in general. Okay, one other point I want to get at is what's happened right now with the Supreme Court. They dropped a hammer. No more restrictions on political parties on big spending with their candidates. The reason this is important is because now, let's say that they continue to go after the crypto market to get money for campaigning, okay? And right now, it's seen as a Republican position. So if you're out there putting money into the Republican Party, what happens if this gamble goes bad and the Republicans lose? Well, who are you going to go against? You're going to go against the donors and the campaign lobbies that were out there pushing to put you out of office, meaning the Democrats. So this, I think, is a very risky issue that we're facing right now. Here's Elizabeth Warren saying that, typical, rhetoric from her, more evidence, adversaries explore crypto to move billions. The Clarity Act, as it's currently written, would make this problem worse. This is the kind of rhetoric that we continue to see coming out of course, Senator Warren. It's not going to change. It's going to continue in that direction. The other thing is that you've got the Senate Democratic leaders calling for hearings to the extent of Donald Trump's and his family's situation in forum crypto deals. So this could be interesting if we start seeing hearings and all those kind of things. This could get bad quick in the United States because of so much corruption that we've got going in the United States government. Speaking of corruption, here's more of those kinds of manipulations that are being done out there. Now you have tribal nations that are pushing back on Clarity, mainly because, remember, most of the tribal nations have great businesses in the gambling category. And of course, they look at Polymarket, Kalshi, etc., when you look at prediction markets, as an existential threat to tribal gaming. So this is another factor that's being pushed, which really doesn't apply to the Clarity Act, but the point is they're being drawn in on it. This is a problem that's being joined into a variety of different special interest groups, and even to the religious side of things. We did a whole video on this, and that was where we had seen even the Catholic faith being in a position where they didn't want to support this. And when they heard all of this, someone decided to reach out to them and say, let's ask them why. Take a look.
Katie Bowler-Goswitch, who is the executive director of the Alliance to End Human Trafficking. They, along with the Catholic Charities, sent out a letter earlier this week, again, to Senators Thune and Schumer. Obviously, ending human trafficking is a very, very important issue. One of the things that the Clarity Act does is it brings crypto within the regulatory perimeter. And so what else you think you need in the Clarity Act in order to be able to make sure that these types of law enforcement concerns are addressed?
I, don't know if I can speak to what else can be added to the Clarity Act. I do know that there is that piece in Section 604 sort of looks at these third-party platform creators.
Why it makes sense to think about like DeFi developers as engaging in money transmission in the first place. I mean, that's what really this is about. They don't seem on the face of it to be money transmitters.
They don't seem perhaps to be money transmitters on the face of it. And I think that's the rub. But in reality, I think they will be involved in money transferring in some way, shape, or form.
Interesting. So what 604, the language of it actually says is, if you do not have control over user funds, you're not a money transmitter. It doesn't say you won't have criminal intent for other things that may happen, or if you knowingly engage in other types of criminal activity, you're not liable. That's pretty consistent with both the Bank Secrecy Act and FinCEN's guidance for many, many years. There are other provisions of the bill that say if you do have control, you are liable. It will actually address your concern.
And I'm not an attorney, but I think it could open up the idea of reasonable doubt. I'm just a normal person who, has a normal understanding of the legal system. But so no offense.
Renato and I will not take offense to that.
So there you have, I mean, this is the kind of thing that I think happens out there is you get special interest groups that look at this and they try to say, oh yeah, this is bad for, whatever our initiative is. In their particular case, a very good one, human trafficking. That's a very big concern. But when you look at the video, this is very unusual. If you guys will notice on the video, let's cut to that and just look at the background of what is behind her. I don't get it, because it's almost dystopian in the sense when you look at the Eye of Sauron, where this is kind of the all-seeing eye. It's almost like the all-seeing eye of the banking industry that's starting to look up. This is the kind of thing that's happening out there right now. Another thing that's happening is you have other countries, and in this particular case, the EU, multiple countries actually coming in with Hammer Day, and that is what's happening right now, because this is Mica Day. Major exchanges right now, EU, Mica, CASP authorization, OKX leading the way right there. And of course, it's 9 out of 10 services right there. But what you will notice here, Coinbase in there, Bitstamp, Crypto.com, pretty much all the majors with exception of one. And that, of course, is Binance, not in there and have withdrawn from Mica accreditation. So big factors happening. This means that we're going to continue to see pushes in the market, meaning there's going to be a lot more competition. Tether can't come. This is a good example. Tether now, of course, facing removal. That has happened today. So all of that Tether, basically liquidity that's in the EU now out, only setting on an opportunity for RLUSD, USDC, etc. When you look at what's going on in the EU, you kind of wonder with Binance. This, of course, is where CZ said failed Mica license, a loss for Europe. Sarzu from OKX Fireback says, what exactly did Europe lose? Another October 11 crash. Man, ooh, shots fired right there. And I want to go to a clip on this because this will explain a little bit more. Take a look.
OKX's founder, Starzu, has been taking a lot of public shots at Binance and you personally. I left early 2015. I thought we left on good terms. And then a couple years later, I launched Binance, right, together with He. And we obviously overtook OKCoin by probably orders of magnitude. From that point on, look, that's the past. They may have a personal imbalance, etc., some psychological effect there. We have plenty of jealousy people who are jealous at our success. Look, if you're jealous, it's okay. But I think for a direct competitor to lash out at another direct competitor, it's kind of childish. It's just very childish. It actually makes me worry much less about that particular competition. Yeah. So I worry much more about other competitors who focus on their product. Yeah.
All right, I don't know what to say to that. I'm always worried about any major that lashes out because there's usually something behind that. And I think this is a major loss for Binance. The EU is going to be a major player in the crypto market going forward. For them not to be there just does not make sense. And I think eventually they will regret that decision. But of course, one that's not going to regret that decision, and that is Ripple, because the EU just handled Ripple a gift. Binance, the world's biggest exchange, now winding down. RLUSD is now the rail pipe that's going to be happening. Ripple already owns this, and it is happening now because that is stablecoin liquidity coming out of Tether right into RLUSD. I want to see what the numbers look like in 60 days, 90 days on what RLUSD's market cap is. I anticipate we'll see a pretty major move there, even with down market in general. All right, guys, so let's get into the good news because I know there's a lot of comments down there calling me Paul the Bear. Paul Bearish. I think it's Paul Bullish. And the reason is what we're seeing happen right now around TradFi, but also in the area of DeFi. And I'll explain in a second. But right now you got Robinhood has confirmed its crypto event. There's going to be big announcements here. Expect that we are going to see tokenized stocks, and I think a lot more in terms of perps and tools that are really going to open this up. Granted, this is one of those that I think will get exposure into more adoption in the space. Remember, Robinhood and their demographic, the average holder, the average age, all of that is going to be good, I think, for crypto in general. Another bullish thing, this is in reference to what's going on within the ETH ecosystem. You have UBS, this is a big bank, and Nethermind complete a compliance proof of concept on an ETH. And what this did was the test showed that banks can now apply, let me kind of zoom in on that for you guys, can apply compliance checks through systems they run on top of Ethereum. So without changing how Ethereum itself works, this approach keeps the network open and neutral and ensures the solution remains compatible with the wider ecosystem. So what this means is there are some chains, I won't mention their names, that might be out there looking at this and go, wait, the banks can do this themselves? I don't need a chain to connect the banks? Imagine what that might do to, I don't know. Maybe it's nothing. You guys tell me in the comments. I'm sure I'll get a few. One other thing that happened is this right here, and that is the launch of another stablecoin. We've got OpenUSD, which is OUSD. Patrick Witt commenting on this, and the point behind this is there's some big players here, guys. Stripe behind it primarily, but Visa also joining this, American Express, Coinbase, BlackRock. If you look at the partner list, there's still a lot in there. I mean, Aave's at the top of the list. Further on down, you've got Galaxy, all sorts of bank organizations, including a lot of the payment rail systems out there, and that would include Ripple as well. So big deals out there. One concern I would have would be this right here, and that is most revenue generated from reserves minus small management fee to participants who adopt and distribute it. So what happens when that management fee changes or there's more pressure on that, and it's in a situation where we could be going into a problem where this still challenges other stablecoins. Circle, though, taking it on the chin right there. Coinbase already eats half the USDC's interest income. Now they're co-founding the replacement, which would be OUSD. And of course, Circle stock definitely took a beating on that news. Jeremy Allaire commented on that. We welcome the continued innovation and competition in the space, and we look forward to remaining laser focused on building the best stablecoin infrastructure possible for more customer and partner success. Those are the, I don't know if that's shots fired or not, but point is you've got Jeremy Allaire addressing it. Welcome OUSD, there's Paulo Adorno, who of course hit us on it. This is Tether in general. Player 2 has entered the game. I like player down here. Gabor can kind of hit on it right there. More like player 99. News on something that's happening right now at the break of what's going on with X Money is MetaMask Money has now also launched. And there's a lot here, including earning up to 4% APY on your stablecoins. So you've got all of that and so much more that seems to be happening. Not an advertiser, not a sponsor, but when I look at what's going on here with MetaMask, this could get very interesting in the DeFi sector. 4% on APY, and I think the tap, this is probably one of the best apps out there right now, make gains between trades. Now you can spend it with your new, credit card or debit card within this, so directly becoming your own bank, up to 3% back on this, and using Apple Pay, GPay. So there's an opportunity right here. I don't know if people will flock to this yet or not, but I anticipate the younger generations will start to look at this as maybe the new bank account for themselves, especially with these kinds of rewards and these kind of earnings in terms of yield. So that is huge for the market. The way it works, because I know many of you, how can they do that? Well, this is the way it works. Go over to Vita Labs. You can follow them. This is essentially the blueprint. Deposit any token, auto convert to MUSD. This is the issued stablecoin. And then that's routed to the Vita Vault, okay, using Monad, and earn on Morpho, which is one of the best ones out there, curated by Stakehouse. Remember, that's who's managing all of these kinds of activities over on Coinbase. No gas, no signups, no swaps. And the best thing here, and this is the reason why I think it might be better than X, is it's free. So think about X Money. X Money right now may only be available to premium members, or at the very base, the $8 member. That's still almost $100 a year. And I just don't know if that can ever make it if this is not free. Can you imagine, though, having a free bank account, guys? A free bank account. Put that in your mind, because it's coming, and it's coming soon. One other note is the UK government looking to tax interest earned on cash on stocks, so cash interest. This, of course, is going up to 22%. This would be pretty significant when you look at that approach now starting to move into DeFi. Just think about that, because we are going to see a whole new set of products that are coming out to DeFi that essentially are going to become more innovative than what we have seen in traditional finance, which is essentially the death of banks. Think about that for a second. They've been fighting all of this, banks, fighting clarity and all of this, but at the same time, all they're doing is paving a way for possibly the new financial system to be in place. One other note I want to get at here, because this is a statement out there by Luigi, and he hit on something right here, and this is in Robinhood. Robinhood and Schwab right now earn a sizable revenue by lending out the stocks, right? They typically keep 50 to 85% of the borrow fees, passing the rest on to you, a stockholder, right? Well, this is what Aave launches. Stani came in and said the protocol is expanding to a total addressable market for crypto assets, all assets classed through security-backed loans and securities lending. So there you have it. This is 4.6 trillion in securities on loan, and it generates about 35 billion in annual revenue. This is happening, guys, because clarity is not in place. This is the problem, that the rest of the world is going to be able to get access to these kind of tools, products, services that are absolutely going to dwarf traditional finance, and it is going to be a slow but fast death for them. I put out a statement right there. X money could be the real threat to banks, but the slow rollout is going to deter users and allow competitors to catch up. I think they already have. And I think the point being is that it's free now. You're also dealing with something that this is just the beginning. Imagine what we're going to see from the rest of the major DeFi players coming into this market. I get what X is trying to do, but I don't know if they can break it unless they make it absolutely free, meaning any Twitter account, a free Twitter account, can come in. They should. I mean, that would be the way to do it, because you're getting basically money on money of how this could be done. And I think that's the only way they could even compete in this market going forward. Things are about to change for the good. So stay tuned. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.